It should be on its way to below 20 if silver is actually to be regarded as money. Now, the problem we have here is that in certain parts of the world, silver is still regarded as money, particularly in China. And also, I mean, I remember, I'm entirely confident. It's not a question of double counting. We have known for decades that gold has been stripped out of Western capital markets and gone into China, which, as I've written in my recent article, I mean, China is like Hotel California for gold. I mean, you know, it can go in, but it can't get out. So that is the reality of it. And of course, the Chinese authorities brought in regulations in 1983, appointing the People's Bank of China with sole responsibility for managing the national gold and silver reserves. And we don't know how much they tucked away. I mean, I quoted Article 3 in those regulations, which basically states that gold and silver acquired by the PBOC as dealer in these, as exclusive dealer in these metals, could be tucked around various state organizations like the army, the youth movement, and so on and so forth. So, and indeed, I have been given anecdotal evidence that there are substantial quantities of gold held by the People's Liberation Army, for example. So this is something which I don't think is necessarily new, but what we don't know is the exact quantities that the state accumulated. But what we do know is that at the same time, the state ramped up gold mine production so that from 2007, it overtook South Africa as the largest nation by gold mine output, and has retained that position ever since, typically producing anything between 350 and 450 tons a year. I mean, it has been declining a bit recently, but they are still the largest nation by mine production. Couple that with, the Hotel California bit, you can see that there is a huge emphasis on ensuring that the state has sufficient gold to cover its currency liabilities at some stage in the future. And it was only in 2002 that the citizens were then allowed to buy gold. And they set up, the People's Bank of China set up the Shanghai Gold Exchange, which it controls to this day, as the mechanism for delivering gold, physical gold, to the public. And since then, the gross value of the gross amount of gold delivered into the public has been in the order of about 28,000 tons. That's quite a lot of gold. And on top of that, of course, you've got the banks who offer gold accumulation accounts to their deposit customers. And for as little as 500 yuan, which is about $75, you can open a gold accumulation account and instruct your bank to transfer every month an amount like, say, 100 yuan into your gold accumulation account. Where else are you going to save? And household savings there are accumulating at the rate of over $5 trillion equivalent every year. I mean, we're talking not trivial amounts. So I think in a sense, while China has been very much in the headlines in terms of acquiring gold and so on, and nobody quite knows how much, nobody quite knows how to analyze it. I think the problem in terms of gold liquidity, physical gold liquidity, is probably only just starting. Ran up, much to the embarrassment, I think, of the American government and also perhaps the European governments who are fully on side with America in terms of, we look to the dollar, if you like, as the replacement value for our currencies rather than gold. I wouldn't rule out that there was some sort of push, if you like, to try and get it lower. And of course, the other thing is that if you look at the position on COMEX and in London, particularly in silver, you ended up with a huge great squeeze. I mean, the silver lease rate jumped up to 40%, I think, on the 9th or 10th of October last year. Gold has got a lot more liquidity. That's not quite so bad. But if you really want to buy large amounts of gold, you go to one of the Swiss refineries and they say, back of the queue. I mean, there's one point worth making, and that is that central bankers around the world actually do understand the distinction between gold as money, final settlement, no counterparty risk, and fiat currencies. And guess what? They've been piling over themselves trying to buy physical gold and sell fiat currencies. And when you look at what the People's Bank of China has been doing, you would think they've been buying gold. That's actually the wrong way to describe it. What they're doing is they're selling fiat currency. I mean, they do, because that's where the portfolio flows are. I mean, they're very much in the Western markets. But, I mean, I've just seen a tweet, which I can't verify, but it's sort of fairly reputable source, I believe, saying that in the last month, China's imports of silver is at a record. You know, I mean, what we're seeing is not so much arbitrage. We're just seeing Western markets being drained. And then there was, I think it was last month, they were saying that, you know, if it wasn't for the exports of gold out of America, I mean, they basically covered the trade deficit. I think that's a silly way of looking at it. That's the way that you know, the Indian government looks at it as well. You know, they don't like to see gold coming in because it screws up the trade figures. But you know, nonetheless, I mean, the gold and silver are still migrating from west to east, and the quantities are not diminishing. Yeah, that's a difficult one. I mean, you know, you say that you know, the rate has been, the gold-silver exchange ratio has been rising. I mean, but bear in mind that it's fallen from a high of 120 down to current levels, which are 60 and change or something. It should be on its way to below 20 if silver is actually to be regarded as money. Now, the problem we have here is that in certain parts of the world, silver is still regarded as money, particularly in China. And also, I mean, I remember, you know, going around the Gulf when I was about, I don't know, sort of 19, 20, in the late 1960s, and Maria Theresa silver dollars were still being used in Arab nations. They trusted that money rather than paper money. So, you know, I mean, the idea that silver is money is something that is not too far back in history as far as the entire Asian continent is concerned. But against that, of course, industrial use has expanded very, very rapidly. And it has become so important, not just for photovoltaics, but also virtually all electronic and defense applications. It is a vital metal being the best conductor of all the metals and having its own specific properties. So much so that America has turned around and said, finally, this is a critical mineral.
Before we wrap up, let's zoom out for a second, because what we're watching right now is bigger than one headline, one candle on the chart, or one day of price action. This is not just about silver going up 50 cents, or gold pulling back after a strong move. This is about something much larger happening in the global system. We are living through a period where trust is being tested everywhere. Trust in governments, trust in central banks, trust in currencies, trust in debt markets, trust in the headlines, and honestly, trust in the idea that the old financial system can keep running the same playbook forever without consequences. And that is exactly why gold and silver matter. A lot of people still look at precious metals and say, why would I care about silver? Why would I care about gold? They just sit there, they do nothing, they have no yield. That is the old argument. But the world we are moving into is not the same world that argument was built for. Because in a world of rising debt, geopolitical instability, currency debasement, weaponized trade routes, sanctions, proxy conflicts, fragile supply chains, and central banks trapped between inflation and recession, the thing that just sits there starts to look very powerful. Gold does not need permission. Silver does not need a bailout. Neither one needs a central banker to reassure you on television. And that is why every serious conversation about the future of money eventually comes back to hard assets. Now think about where we are today. Global tensions are not fading away. They are multiplying. The Middle East remains a pressure point. Europe is still dealing with long-term strategic instability. Asia is becoming more economically and militarily competitive. Energy corridors matter. Shipping lanes matter. Semiconductor supply chains matter. Food security matters. The dollar system matters. And every time one of these things gets shaken, markets start repricing risk. That repricing of risk is where gold usually gets the first spot. Gold is the monetary metal. Gold is the one central banks understand. Gold is the one they quietly respect, even when they publicly act like fiat is invincible. But silver is different. Silver is the metal that lives in two worlds at once. It is monetary, but it is also industrial. It is history and future at the same time. It is old money and modern technology in the same metal. That is what makes silver so interesting. And frankly, so explosive when momentum finally builds. Because silver is not just a shiny rock. It is used in electronics, solar infrastructure, industrial systems, advanced manufacturing, medical applications, and more. So when the world talks about green energy, electrification, reindustrialization, military tech, grid expansion, AI hardware, and supply chain security, silver is sitting right in the middle of all of it. That is why silver bulls never really go away. They may get mocked, they may get early timing wrong, they may have to sit through painful consolidation, but the core thesis keeps coming back because the metal keeps mattering. And let's be honest, silver has a personality that gold does not. Gold moves like a king. Silver moves like it just drank 3 espressos and saw a breaking news alert. Silver is calm until it isn't. That is why silver drives people crazy. It can look asleep for weeks, and then suddenly it moves like the market remembered all at once that above ground supplies are tight. Demand is real, and the paper game only works until confidence starts slipping. That is the part many casual viewers miss. Most people only become interested in silver after it already made the move, after the breakout, after the headlines, after the FOMO starts, after the mainstream financial channels begin pretending they always understood the story. But real positioning usually happens when nobody is excited, when the comments are quiet, when the chart looks boring, when everyone is distracted by the next hot trade. That is how these markets work. And the geopolitical side only makes this more important. Every new conflict, every new sanction regime, every new currency settlement outside the dollar system, every new shipping disruption, every new defense escalation, every new energy shock adds stress to the financial architecture. Maybe not enough to break it in one day, but enough to weaken confidence over time. And markets run on confidence. That is the key point. The system does not need to collapse tomorrow for metals to matter. It only needs people to slowly realize that the system is not as stable, not as neutral, and not as durable as they were told. That is when gold becomes a signal. That is when silver becomes a story. And that is when retail investors, institutions, central banks, and everyday savers all start looking at the same assets from different angles. Some buy gold because they want security. Some buy silver because they want leverage to the same macro trend. Some buy both because they do not want all their faith sitting inside digits on a screen backed by policy promises and political incentives. And can you really blame them? Look around. Governments keep spending, debt keeps rising, currencies keep getting diluted, wars keep threatening trade, politicians keep promising stability, and ordinary people keep noticing that their money buys less than it used to. That is not conspiracy. That is lived reality. This is why gold and silver are not just investments to many people. They are a response, a hedge, a form of skepticism, a statement that says, I do not fully trust the system, and I want something outside of it. Now, does that mean metals only go up? No. Does that mean silver cannot be volatile? Of course it can. Does that mean gold cannot correct? Absolutely not. But zoomed out, the bigger picture is what matters. Precious metals do not need perfect conditions. They need persistent stress, and the modern world is delivering plenty of that. That is why, on this channel, we do not just stare at price charts in isolation. We connect the dots, because silver is not trading in a vacuum. Gold is not moving in a vacuum. Markets are reacting to debt, diplomacy, war risk, central bank behavior, inflation expectations, real yields, industrial demand, and public psychology all at once. That is why one random headline can move these markets. That is why one central bank statement can change momentum. That is why one geopolitical flare-up can turn boring metals into the most interesting corner of the market overnight. And this is where the memes almost write themselves. One day the mainstream says, nobody needs gold anymore. Next week, central banks are stacking it. One day people laugh at silver holders. Next week, they are posting rocket emojis after a $2 move. One day, analysts say inflation is under control. Next week, your grocery bill files an official complaint. That is the clown world element of markets. You can almost picture the meme. Fiat currency after another trillion in debt spending. I'm tired, boss. Or this one. Silver investors after waiting for months and seeing a 4% move. Everybody stay calm. Everybody stay calm. Or the classic energy of the metals crowd. They called me crazy at 22 silver. They called me lucky at 32 silver. They called me again at 40 asking what to buy. That is the emotional cycle in a nutshell. And if you want a few tweet-style lines to flash on screen during this segment, here are some that fit perfectly. Gold is not chasing the news. It is pricing the loss of trust. Silver is what happens when monetary anxiety meets industrial reality. Every empire prints. Every market pretends. Gold remembers. Paper promises are infinite. Real metal is not. Geopolitics is bullish for uncertainty. Uncertainty is bullish for hard assets. Central banks buy gold while telling you everything is fine. That should tell you enough. Silver does not move when people are comfortable. It moves when comfort breaks.